Why does crypto feel rigged right now? Why does it feel like no matter what you buy, it dumps? Why does every pump feel fake, every breakout get sold, and every good news headline get ignored? And most importantly, why does it feel like someone always knows what's about to happen before it happens? If you've ever stared at your chart and thought, this can't be random, you're not crazy. Because what's happening in crypto right now isn't random. It's not broken, and it's not rigged in the way most people think, but it is structured. And once you see the structure, the frustration disappears. Today, I'm going to walk you through what's actually happening behind the scenes of crypto markets, why it feels unfair, and how to survive and even win in an environment that punishes emotion and rewards patience. No hype, no fear, no nonsense, just clarity. Let's start here. Every single market cycle, right before the biggest moves, most people feel exhausted, confused, and defeated. Not excited, not hopeful, not confident. Defeated. That feeling is not an accident. That feeling is the signal. And once you understand that, you stop fighting the market and start moving with it. Let's break this down. 1. The market isn't rigged. It's designed. Crypto doesn't move based on fairness. It moves based on incentives. And the biggest incentive in any market is liquidity. Liquidity means buyers and sellers. It means volume. It means participation. Without liquidity, there is no market. So what do market makers, institutions, whales, and smart money need? They need your emotions. They need your fear. They need your greed. They need your impatience. They need your certainty at the worst possible moment, because that's how they get liquidity. Think about it. When do most people buy? When price is going up, when everyone on Twitter is bullish, when YouTube thumbnails say breakout confirmed, when the chart looks perfect, when the story sounds clean. That's when retail piles in. And what happens next? Price stalls. Then it pulls back. Then it chops sideways. Then it dumps. Not because crypto is broken, but because liquidity was just created. Your buys gave someone else an exit. Now flip it. When do most people sell? When price is going down, when headlines turn negative, when influencers disappear, when charts look ugly, when confidence collapses. That's when retail panics out. And what happens next? Price stabilizes, then it grinds, then it turns up, then it explodes. Not because crypto is random, but because liquidity was just created again. Your sells gave someone else an entry. This isn't manipulation. This is how all markets work. Stocks, forex, commodities, crypto. Every market moves through pain, not around it. If markets rewarded everyone equally, there would be no market. Markets exist because most people lose so that a few can win. Not because the few are evil, but because they understand structure. So when crypto feels rigged, what you're really feeling is this. You're feeling what it's like to be on the wrong side of liquidity. Not because you're dumb, not because you're unlucky, but because you were never taught how markets actually work. And that brings us to the second layer. 2. Most people think markets move on news. They don't. This is one of the biggest misconceptions in crypto. People think price moves because of CPI data, interest rates, ETF approvals, regulations, court cases, tweets, headlines. But news doesn't cause moves. News justifies moves that were already planned. Let me explain. Large players don't wake up and say, oh, wow, CPI came out lower, let's buy. They position before the news. Then the news comes out. Then price moves. Then retail reacts. Retail always reacts last. Not because retail is slow, but because retail doesn't have access to positioning data, order flow, or liquidity zones. Smart money knows where the majority of stop losses are. They know where breakout traders enter. They know where retail panic sells. They know where leverage builds up. So what do? They push price towards those zones, not to hurt people, but to trigger liquidity. Think about it. How many times have you bought a breakout, then watched it instantly reverse, sold support, then watched price bounce immediately, set a stop loss, then watched price hit it and reverse, got liquidated, then watched the market go in your direction? It feels personal, but it's not. It's mechanical. It's structural. Price is drawn to liquidity the way gravity pulls objects downward, and retail is the largest source of liquidity, so the market moves against the majority, not because it's evil, but because that's where the money is. Now, here's where it gets interesting. When retail is most confident, that's when they're most wrong. When retail is most fearful, that's when opportunity is closest. This isn't theory, this is data. If you overlay retail positioning with price action, you'll see it again and again. Retail longs at tops, retail shorts at bottoms. Not because retail is stupid, but because humans are emotional. We buy when we feel safe, we sell when we feel scared. Markets exploit that. And that leads to the third piece. Crypto cycles are psychological traps, not financial ones. Most people think crypto cycles are about money. They're not. They're about psychology. Every cycle follows the same emotional arc: hope to excitement, to euphoria, to complacency, to anxiety, to denial, to panic, to capitulation, to depression, to disbelief, to hope again. Every single time. Different assets, different narratives, same emotional pattern. And here's the key. Price doesn't move based on fundamentals alone. Price moves based on how people feel about fundamentals. Two people can see the same Bitcoin chart, the same ETF news, the same macro data, and one will say, this is bullish. The other will say, this is bearish. What's the difference? Emotion, positioning, pain, experience. Right now, most people feel burned from previous cycles, exhausted from chop, confused by sideways price, skeptical of every pump, afraid to trust again. That emotional state is not random. It's the exact emotional state markets create before major upside moves. Not because markets want to reward patience, but because markets need disbelief to exist. You can't have a massive bull run if everyone already believes in it. If everyone is bullish, there's no one left to buy. So the market must break belief first. It must make people give up. It must make people stop watching charts. It must make people lose interest. It must make people emotionally detach. That's when the next leg starts. Not when everyone is excited, but when almost no one is. So when you say crypto feels rigged, what you're really saying is, I feel emotionally disconnected, confused, and tired, which is exactly where markets want you. Not because they hate you, but because they need disbelief. Disbelief creates asymmetry, and asymmetry creates opportunity, which brings us to the fourth piece. The biggest edge in crypto isn't strategy, it's time. Most people think the edge in crypto is finding the next 100x coin, timing tops and bottoms, reading charts perfectly, getting early access, having insider info, being smarter than the market. That's not the edge. The real edge is time. Time in the market, time observing cycles, time watching your emotions, time understanding structure, time staying when others leave. Most people don't lose in crypto because they choose bad coins. They lose because they quit at the wrong time. They sell after a crash, they buy after a pump, they chase narratives, they abandon positions, they overtrade, they revenge trade, they try to make it back. Not because they're reckless, but because they're emotional. And markets punish emotion. The people who consistently win in crypto are not the smartest, they're not the fastest, they're not the most informed, they're the most patient. They understand that crypto moves in waves, not lines, that trends take months, not days, that accumulation feels boring, that breakouts feel fake, that dumps feel final but aren't, that euphoria feels infinite but isn't. They don't try to predict every move, they position for ranges. They don't chase pumps, they accumulate weakness. They don't panic sell dumps, they manage risk. They don't try to be right every day, they try to survive long enough to be right eventually. And that's the real game. Not making money fast, but staying in the game long enough for compounding to work. Which leads to the fifth and final piece. Crypto isn't rigged, your expectations are. This is the hardest truth. Most people come into crypto with expectations shaped by Twitter highlights, YouTube success stories, 100x screenshots, influencer profits, overnight millionaire narratives, Lambo memes. This coin will change your life thumbnails. So when reality doesn't match the fantasy, it feels unfair. It feels rigged. But the problem isn't the market. The problem is expectation. Crypto is not a get-rich-quick scheme. It's a volatility transfer system. It transfers money from the impatient to the patient, from the emotional to the disciplined, from the short-term thinker to the long-term planner. And it does so ruthlessly, not because it's evil, but because that's how markets work. If crypto truly rewarded everyone equally, it would collapse. It only works because most people lose. That's the uncomfortable truth. But here's the good news. You don't need to beat everyone. You just need to stop beating yourself. You don't need to time every move. You just need to stop reacting emotionally. You don't need perfect entries. You need consistent behavior. You don't need insider info. You need self-awareness. And you don't need to escape the system. You need to understand it. Because once you understand it, you stop feeling hunted. You stop feeling targeted. You stop feeling unlucky. And you start seeing patterns. You start seeing structure. You start seeing opportunity in places where others see pain. Let me give you a simple mental model. Markets move in 3 phases. 1, accumulation. 2, expansion. 3, distribution. Accumulation feels boring, slow, and frustrating. Price goes sideways, nothing happens. People lose interest. News feels quiet. Expansion feels exciting, fast, and euphoric. Price breaks out. Everyone talks. Social media explodes. Confidence skyrockets. Distribution feels confusing, choppy, and deceptive. Price stalls. Fake breakouts, fake breakdowns. Narratives change. Volatility spikes. Most people buy in expansion. Most people sell in accumulation. Most people panic in distribution. Smart money does the opposite, not because they're smarter, but because they're patient. They buy boredom. They sell excitement. They buy fear. They sell greed. They buy disbelief. They sell certainty. And this pattern repeats over and over across every cycle. So when crypto feels rigged, ask yourself, am I reacting emotionally or responding strategically? Because the market doesn't care how you feel. It only responds to behavior, and behavior is predictable, which means the market is predictable, not in direction, but in psychology. You can't predict price, but you can predict people, and price follows people. That's the game. Now, let's zoom out. What's actually happening right now behind the scenes? We're in a transition phase, not a collapse, not a breakout, a transition. Liquidity is being absorbed. Weak hands are exiting. Strong hands are accumulating. Narratives are shifting. Attention is fading. Emotion is cooling. That's not bearish. That's structural. Every major bull market begins with confusion, boredom, skepticism, low participation, low conviction, not with hype, not with excitement, not with certainty. So if you feel tired, confused, or detached right now, you're not early, but you're not late either. You're positioned emotionally, positioned psychologically, positioned structurally, and that's where real opportunity begins. Because the people who win the next cycle aren't the ones screaming right now. They're the ones quietly preparing. They're building conviction. They're studying structure. They're managing risk. They're stacking time. They're staying patient, not because they know something secret, but because they've seen this before. They've seen how markets break people emotionally before rewarding them financially, and they've learned not to confuse emotion with reality. So here's the takeaway. Crypto is not rigged. It's designed to feel rigged. It's designed to exhaust you. It's designed to confuse you. It's designed to test your patience. It's designed to punish your emotion. It's designed to reward your discipline. Not because the system is evil, but because that's how markets survive. And once you stop fighting that design, you stop losing to it. You stop chasing. You stop panicking. You stop reacting, and you start positioning. Positioning for time, not timing. positioning for structure, not stories, positioning for psychology, not predictions. That's how you survive. That's how you win, not by outsmarting the market, but by outlasting it. So the next time crypto feels rigged, don't ask, why is this happening to me? Ask, what is this preparing me for? Because markets don't move to punish you, they move to shape you. And if you let them, they will turn confusion into clarity, fear into discipline, and frustration into opportunity. If this helped you see the market differently, stick around, not for hype, not for predictions, not for false certainty, but for clarity. Because in crypto, clarity is the real alpha, and patience is the real edge. I'll see you in the next one. Disclaimer: by watching this channel, you acknowledge that you understand the risks associated with cryptocurrency trading and investing, and you are solely responsible for your own trading decisions. Stay informed and trade responsibly.